So hopefully you can all see this. And I've slightly amended my title to Angel Investing for Women, but it's totally about A to Z of angel investing. But I wanted to be absolutely clear that this is an important focus today for us and our thinking. And I know that many of you here today are men, and I don't hold it against you at all. But I do hope that those of you who are in touch with women and find this a useful presentation today will encourage many more women that you're aware of to think about this. And we've just mentioned a little bit about the risks, but the benefits are obviously huge on both sides. So just a little bit about UKBAA, very much a small amount about us, but UKBAA is the trade body for angel investing, and we operate right across the UK, Scotland, Ireland, Wales, as well as the UK. And we've been operating since 2012, although we had previous iterations of the trade body before that, and I've been the CEO since 2012. But we have a massively interesting ecosystem that we work with at UKBAA. So we work with about 84 angel groups, of which DBA is one of them. And we work with well over 15,000 angels across the country through those groups, and also we have quite a lot of individual members. But we also have a lot of VCs, venture capitalists, who want to be part of the scene and have access to companies that have been nurtured by angels, opportunity to co-invest, as well as many of you will have come across a lot of online platforms, not just the Crowdcube and Seeders of this world, but many platforms are offering opportunities online. And obviously with the pandemic, that's increased. We work with accelerators because we see those as a very important pipeline for angel investing, and that's incubators, accelerators, university sectors, corporates, and a huge number of wonderful intermediaries. And it was great to meet Liz today as well. But we know how important they are to this whole environment, and so we're very delighted to be in touch with them. So what do we do? Well, we're very much there to connect people. We are massive connectors and conveners, and this is obviously one opportunity today to connect with you. But we also connect angels with good deal flow as well, and we do a lot of events around that. We work very closely with government. We are the voice of the angel community government, and I spend a lot of time working with government and key agencies, British Business Bank, Innovate UK, and many key agencies that are really part of our world and help make an important environment for angel investing. We're here to build and grow angel investing, and that's really very much why I'm here today, to help build and grow Dorset Business Angels and increase their diversity, their gender base of their investment community. And we help groups to form and build and grow across the country. And we do a lot of education. And again, that's another reason I'm here today, because understanding how to invest and understanding the opportunities of angel investing is so important, and we do a lot of education on that. So just to give you a kind of an overview of what is angel investing about, and I'm pretty sure that most of you do know, but I thought it'd be good just to situate angel investing now. So first of all, what is a business angel? And I think often there are lots of confusions around what is and what isn't a business angel, but the most important part about a business angel, it is someone who's using their own money. It's not putting your money into a fund. It's making your own decisions about your money. And this is generally, hopefully, alongside others, and others who know and others who are experienced. But it's very much about making your own decision. And as already been mentioned by Liz, it is about using your spare capacity. It's not about, don't bet the house, don't bet the kids' school fees, don't bet your pension. It's very much that spare money, but it's not necessarily at retirement. It can be, money you're setting aside along the way, and lots of women and men are investing alongside their day jobs, and that's increasingly common. It's not all about waiting till you're retired, and lots of women have quite multi-portfolio jobs, one of which is angel investing. But also, it's really important to bear in mind, you are taking shares. You're taking shares in a small business, and you're taking shares in return for giving them equity, and therefore you're very aligned with entrepreneurs. The kind of shares we take as angels tend to be what we call ordinary shares, so they're very much aligned with entrepreneurs. And that's what really makes angel investing so important, because it's not just about the money, it's about the advice, the experience, the help and support, the introductions, the contacts, everything that you can do to help an entrepreneur, an early stage business really trying to build and grow and achieve their growth ambitions. What can you do to help? And that's really what most of us are about, is how can we help? What can we do to make a difference to the success of this business? And by doing that, that makes the outcome for you the success as well, because their success ultimately will become your success and hopefully your benefits and your returns. And that's really, really what is important. And the final point I make there is very much about co-investing, because angel investment is very important in its own right, but we frequently co-invest with other angel groups, with venture capital, with other funds, and often with grants. And I'll say a little bit more about that shortly, about how you can leverage the money that you're putting in and build and grow. Why do we do it? Well, I think the first thing we'll all say, and I'm sure Don would agree and others in the room who are investing, it's absolutely fun. It's you know, you can't do it without enjoying it. It's actually great fun. It's exciting because you never know what's going to happen. And it's incredibly social. And it's something, you know, I'll say a lot more about how always do it with others, never do it on your own. And so it's a very social and fun thing. There is a level of altruism, and the reason I say that is because, first of all, we're taking risks with our money, and I'll say a bit more about that too, but also because you're generally doing it, and if most angels we talk to actually, you'll find that actually making money is not the top of the list. Now, that is if, you know, if you're putting money in stocks and shares, that may well be what you're doing. But actually, there's another element to this, and I'm sure you'll all agree, those of you who do this, there's an element where you do it because you're passionate about helping entrepreneurs, often helping the economy, very often helping your local economy and your local region. And you can see that opportunity to make a difference. And that is really why often we do it. And if we're lucky, it works and we make some money. But actually that's, you know, that there's a level of luck and a level of, obviously, you know, experience that helps with that. But you have to put those first two there, I think, at the top to make it all really worthwhile. So I just wanted you to all think about that. Oop, what's happening now? Okay. So again, just situating angel investing in what I call the funding landscape, because it's very important to think, where do you make a difference? So most entrepreneurs start out, you know, what we all call bootstrapping, maxing their credit cards, very often going to the bank of mum and dad if they're lucky, and generally sort of having to do a lot and make do, and a lot of what we'll call kind of sweat equity, spending a lot of time in doing that. And really, that is really where they're really developing and building the first, perhaps it's a prototype, perhaps it's something they can demonstrate, start to test it out, start to understand if anyone wants it, needs it, is interested in it, and whether it actually will work. And to be honest, whether it's likely to make money. And that is not necessarily selling anything at that moment, just getting to the point where they've got something that they can demonstrate and show. And that's really where angel investing starts to make a difference, where you can see that if you put money into the business, you can actually move that early stage concept that's been tested a little bit, and you can see what it is and you can see the potential of it. And that's really where your money can start to make a difference. And it's generally when the business starts to need about 50 to 100K. To be honest, if you give a little bit of money to a business, and I'll say more about where that 50 to 100K comes from, and it won't all be your money, it will be probably from a group of you. It's important to bear in mind that little tiny bits of money don't necessarily achieve a big effect and growth if you're really helping a company to build and grow a business. So they need to be there ready to take on board and use a relevant amount of money, and that you can be part of that money that can really start to make a difference. And that's really, I'll say quite a bit more shortly about syndication and the kind of way that Dorset Business Angels operate. That's really where it starts to happen. But also, as you build and grow, you will be putting potentially more rounds of money into that business. And that's something to bear in mind. One bit of money rarely works enough. Generally, there is a need for more as the business grows. And then really you're helping to build and nurture that business towards when it will be ready for what we'll call, stage A, if you're aware of that term, but venture capital, which really has, is bigger amounts of money. It's other people's money, it's funds, and where there are bigger demands on the growth of the business and expectations. But your role is very much nurturing, building, growing, and being part of that success story. And as a company kind of builds and grow, they may well take on bigger growth venture capital money, quite considerable sums as they build and grow. And really what you're looking for is to have a company that can have the capacity to go through a number of milestones and ultimately be ready either for an exit or for what we, an IPO to float on the stock exchange. Hopefully someone might acquire it and you'll be part of that story, or maybe you'll be staying on and letting that business go and become public on the stock exchange. And there have been quite a few exciting stories this year about that too. I'm sure most of you have heard of Deliveroo. That's done so well in the pandemic. It was able to float on the stock exchange, probably a very good example. But that's just so you understand, where this all fits in. And then really to come back to the angel market, it's often to think, well, is it just a teeny little thing? What's it all about? Actually, we don't know the full dimension of angel investing. And the reason we don't is really because it's private individuals' money. And you don't know all of those deals that are being done. But the one thing we do know is that people who use tax breaks, and I'll say a little bit more shortly, the enterprise investment scheme, you have to report on the investments you've made and in order to get those tax breaks. And so we gather data every year through HMRC and HMT. And what we do know is, on average, and for the last few years, over 2 billion has been invested by private investors in over 4,000 businesses annually. And it will be interesting to see the figures after 2020, when perhaps there were some challenges. But overall, this has been a growing sum since the last financial crisis. That is, a very big part of it is angel money. I will say, and this is a very important thing if you look at the geography here, is that so much of that angel money is still very focused on the London, Cambridge, Oxford golden triangle, as we call it. And that's why it's so important to think, how to make a difference here in Dorset, because you've got such an important opportunity to build and grow great businesses here. And we need to move some of that capacity and that money and make sure there's lots more people with that capacity here in Dorset, including hopefully many more women. So I mentioned tax breaks, and I'm not going to go into depth of that today. It may be touched on by others, but it's very important to bear in mind that the government recognized over 25 years ago that this was important what private investors do, and they needed to back those individuals, and they needed to help them offset their risks and offset the sacrifices they're making with their money in terms of what alternatives they might be doing with that money. And so the government brought in a tax break called the Enterprise Investment Scheme, which over time has developed into mainly a 30% tax relief, which you get through your own tax, through your own income tax, when you put that into the government, into your claims. And that's incredibly useful. You also can defer capital gains tax, and you also can defer your inheritance tax. And capital gains tax you can actually keep rolling over, which is very, very interesting indeed as you make more investments. And then a few years ago, actually it's some years ago now, to be honest, it's 2011-12, straight after the financial crisis, when Cameron was the Prime Minister, he recognized the need for more, that there was more of a tax break needed to make sure that we really could help startups, very early stage businesses. And so he brought in the Seed Enterprise Investment Scheme, which gives you 50% tax relief. You can only invest 150,000 of your money in that kind of support. Well, the Enterprise Investment Scheme, you can invest up to $1 million a year. But the good thing about it is that you can really help a very early stage startup, and the government recognizes that too. And probably the third thing worth knowing about, because the government does care how to make angel investment work better, is that the government has brought in a number of co-investment schemes, one of which again brought in 2012 after the crisis, which was 100 million angel co-fund. There are a number of regional angel co-investment funds, including one in Wales and one in London, one in Scotland, very effective, one in Manchester. Hope you'll get one down here soon. But also 2 years ago, the government brought in the Regional Angels Programme, which means that experienced angel groups, not individuals, can apply for a pot of co-investment fund from the British Business Bank between 5 and 15 million to sit alongside the work they do as angel groups. It's quite complex, and Don knows I'm working on it to try and get them to make it a little bit easier to access, but it's worth knowing that the government is behind angel investing and does want it to work. So I'm going back to the topic, because what is this market? Well, this market lacks women in angel investment. And at the moment, even to our very best efforts, we've still really only got between 15 and 20% of the whole angel market, that big piece I showed you on that map, 2 billion or whatever, only about 15 to 20% of investors are women at this time. In fact, and even fewer are from ethnic minorities as well. But it's worth bearing in mind that in the US, it's 29%, which is in fact a big improvement on ours. But none of us have really cracked this when you think how much wealth and how much experience women possess. So there's a long way to go. We're making slow progress, and events like this are very important. And we have got a growing number of all-female syndicates that are starting to form themselves, and angel groups, one of which is Angel Academy that Bridget represents. But there are opportunities, I think, for groups like Dorset Business Angels to grow their own internal community of women and have women taking a serious part and role in investing. And I don't mean as just additional money, I mean making decisions, taking leads, and really helping to put significant support. And the reason it's important, another good reason, is that if you look at women, and the research we have done has shown this, most women have between 30 and 50% of their portfolio in women founders. So in other words, women back women. I'm not saying men don't back women, but women definitely back women. Women get how to support women. They often get the challenges that they've been through their own business careers. And so it's very, very important, again, for the overall ecosystem, and to ensure that women founders who themselves are lacking in access to sufficient angel investment, that by having more women in your group, diversity of thought, diversity of thinking, and diversity of leadership, you are likely to be able to attract more women founders and actually hopefully invest in more women founders. So that's a positive all round. Not to mention the fact that it's a missed opportunity. Women are out there, they have money, and they have opportunity. And most importantly, so many women have fantastic experience that they can bring. So that's really why we need you there. So why haven't women been getting involved? Well, there are issues. They are continuing issues. It's quite right, it's seen as risky. I have to say, women are not risk averse. Women are risk aware, okay? Those are two very different concepts. And I have to say, and it's very good to hear from Liz today, because most women that we surveyed, 90% of them, even if they were investing, but most importantly, those who were not investing, had been given no advice and support by their advisors about how to engage with angel investing. It was seen too risky for them. They were encouraged to invest in assets, and not even told sufficiently even about the tax breaks to help them make that decision. So there's a lot more work to do with the advisory community, I might say, and I'm glad to see that some people are leading the charge on that. So that's very important. It's often thought by women you have to be super wealthy. And actually you don't. I mean, there are a few people out there doing it who are super wealthy, but you will find that most people are putting modest amounts in, because we're working in syndicates, and that allows us to spread our bets and put in small amounts of money. And I'll talk a little bit with Bridget about that shortly as well. But it's definitely not just about being super rich. In fact, that could almost get in the way. I think it's about having some spare money and a lot of experience. So that's very important. Also, I think women have lacked knowledge about angel investing. We've obviously not had enough opportunity to give these kind of educational events and knowledge sharing. And actually, because there's not that many women out there, there's not a big network of knowledge sharing around angel investing, which I think is something to bear in mind. For those of you who do know about angel investing, do talk to other women about it. Encourage women to know about it. This isn't something that they shouldn't know about, but often they don't have access to that. And quite frankly, they've often lacked access to female-friendly environments in which to invest. As I said, there are only a few groups where there are all women or mainly women there, but it's a beholden to us for where there's a lot of men in that group to really think how to make that very friendly, very inviting, very attractive. What can you do? How do you encourage people to find out more? How do you invite women in? Do you think about when you do your events? Do you think about whether someone's out there to meet and greet? Do you think that you can really communicate with women? And can you help them to properly understand the process? And how far can you sort of buddy with them, help transfer experience and knowledge? That's a bit of a call to action, but I think it's something really to bear in mind. And this is, in a way, part of good practice that we want to really be encouraging for more people to take on board. It's not easy to walk into a group as a woman, and when they're all men there, you can imagine. So getting started. Well, I've banged on quite a bit already about this, but always be part of a group. Never do this on your own. First of all, it's very boring and dull and lonely and isolating, but actually it means it's all down to you, all down to your decision making, how you help the business, whether you're giving sufficient money, where does the next money come from, and really all the risk and all the responsibility is down to you. Now, some people may like that, but overall, I don't think that is the way angel investing has its most benefit. So what you have the opportunity to do is, first of all, you're pooling your money. That means you're putting smaller amounts of your money into a number of deals, building a portfolio. That's the name of the game, and we'll say a little bit more about that. You are sharing your insights, your experience, your knowledge, your perspective of why you think that's a good investment. Someone else may know that sector really well. Others may have already had experience and think it isn't good. It gives you that chance to really share. And it's not just due diligence, it's all of those early instincts and evaluations that matter. Clearly sharing deal flow, because you all see different businesses and different opportunities, and that's very important. And most importantly, it means you've got a massive skill set to share with those businesses as you go forward. And as those businesses may need and come back to you for more money, it's not all down to you. You're sharing that load, you're sharing that responsibility of growing the business. So totally always do it as part of a group. It's nice to have some advisors around you, but to be honest, you need experienced angels and sharing that experience and knowledge as well. I always say this: follow someone you trust and respect, because actually when you first start investing, it's very difficult to know what's what. So I'm totally in favor, first of all, of lead angels. So lead angels are people who, in any deal, I know that Don does this quite a bit as well, take a lead, help pull the deal together, help everyone understand the opportunity, support the kind of different areas of due diligence and evaluation of the deal, and often then may provide some hands-on support and help going forward on behalf of the group. But out there in angel investing, there are definitely some incredibly experienced people, and as a woman, you're starting out, you need to buddy up. And so I will say, another big thing for DBA to think about, who's going to be buddies to new women as they come onto. We need buddies, okay, and that can be other women or men, but we need people to be able to say, well, what was all that about? Why did you make that decision? How did that work? What do we do next? How does it all go? And more importantly, to get to understand what to invest in. And that's really important. So do, my advice to women, follow some of my advice to the investors here is make sure you help and support women in that way. It's really important as you go forward. And then what is this all about? Well, the big thing about it is not just about your money. It is really what can you do next to help those businesses. So say you've decided to back a woman founder or just an exciting team or whatever. It's most important that you really can do a number of things here. I mean, one of which, of course, is you do need to keep a bit of money back to invest. And I will say more about that in a moment. What do you do? Who do you know? You know customers, you know things about the business, you may know the sector, you may know people who may want to buy the product or test the product, everything that you can do to make introductions and links to customers, etc., and to potential buyers. And then also, what advice can you bring? You may sit on the board, or you may be an observer. You may be really giving strategic advice to a very small business about how to build and grow. And if you've been successfully running a business yourself, or been in a corporate or been in a business, you'll know a lot that they don't. Everything from the finances to the HR, all kinds of things that you can help. But I do say, and that's my fourth point, don't get too involved. You have to leave them to run the business and make mistakes, to be honest. But with your gentle nurturing and your help, they'll make fewer of them, and you'll probably anticipate things they haven't seen before. So that's the good bit, as well as the kind of bit of wise advice about don't get over involved. And most importantly, I will say this, you don't take money back that you put in. So this is not about fees. This is not about NEDs taking money out of small businesses. The money is going in there to help them build and grow. You don't take it back with the other hand. Clearly, the one thing to bear in mind about angel investing, and again, those of you know the game very well will know this, it can be years until you see your returns and your exits. They're on very rare occasion, Google or Amazon or someone pops up and buys the business after 2 or 3 years, but the norm is between sort of 8 and 12 years. And that's a norm, and that can be a lot longer than that. So you have to be very patient. So it's a marathon, not a race to the end to get that business success. And there's many players will come along in between. As I mentioned, you need to be sure you can hopefully follow on. You don't have to follow on the next rounds, but every time you don't follow on, your money has less and less importance in that deal. It becomes a smaller and smaller part of the overall capital. So think how, when you put some money in, that being aware that if that business is growing successfully, you may well need to put some more in as well over time. Remember, as a syndicate, these are small amounts as well. And also, it's worth bearing in mind that there's a level of time you need to give to this, which is very important, because you need to see a lot of deals to know what you want to invest in, what you like, what you're interested in, where you have the capacity. And that's the great part about being part of a group, because you're part of that whole flow and pipeline that, for example, Dorset Business Angels would bring to you in that way. But it's really important to see a lot of deals and be aware of what's being invested in, so you know if that's a hot place or not. It's really important to know that. And then the other thing to bear in mind is that your money does not have to play on its own. So the whole point about angel investing is that you need to use your money to leverage finance from other sources, and that can be grants, it can be bank money, it can be loans as well, and also from other angel groups, and indeed even early stage funds and VCs. So money on the one hand from angels, it can be worked very well to build a whole pot of bigger money, helping your company that you've backed to grow even faster and helping your money go a long way. So it's very important to think of that. Now, here's the interesting thing. There's very little information on this, and this goes back some time, but it is really worth bearing in mind, because for all the research that's been done, it seemed to come out pretty much always the same. First of all, it's worth bearing in mind that a lot of the investments you make will not make a return for you. Some may not even return the money you put in there. A lot may just about squeak you even. And it's like, if you look at that, so, you know, the stats are in many ways quite stark, but what you have to focus on is the smaller end of this, is because actually by having a portfolio, there will be some businesses in your portfolio that are like to do exceptionally well. And you have lots of middling stuff and not very much stuff, and stuff that we even call zombies, which people will know about, which merely mean they're not really going anywhere, although they never quite go. You will get some great ones out there too. And that's really what makes it all worthwhile and gives you the, you know, the serious opportunities. But it's patience, it's patient money. We call it patient capital. Angel money is patient money, but a portfolio is quite fundamental in this. And you really need to build about 10 at least in a portfolio. And how do you do that? Well, by being part of a group helps make that happen. Having to make 10 lots of individual decisions is very tough, but being part of a group where you can sometimes have a very small amount and sometimes slightly bigger share, sometimes maybe take a lead, but having a mixed portfolio with not all, don't put all your money in one particular small niche or anything like that, making sure you get a broad set of opportunities. And you do need to build 10, and that means you're building over time. So that's another thing to bear in mind. There's lots of theories around this, but 10 is an absolute minimum, and ideally sort of 15 plus starts to make a difference. I think Don will probably disclose how many investments he's made in due course. So you've thought about what, like, that's like, in a way, that's your thesis behind all this now. Like, that's like understanding all that kind of thing that surrounds your thinking and your decision making and how you might operate. But it's often interesting just to think, well, what would I really concentrate on then as an angel? What are the kind of big things I need to think about? And to be honest, there are three very big things it's always worth thinking about. We as angels look at the individual and the team. I mean, if it's a very early stage business, there may only be one or two people, ideally more than one, if you're being attracted to a business. But the people are what make all the difference. I mean, who is running this business? Have they got the passion, the drive, the commitment, the experience, the skills and knowledge that they'll need to build and grow a great business? And you spend a lot of time as an angel talking to the people. It's absolutely fundamental to your investments. You spend a lot of time talking. And then, is it scalable? Can it build and grow? And also, can you be sure that it has the right business model, that it can replicate itself or build and grow? And then finally, there's what we'll call market fit. In other words, is it really going to make a difference in the market? And is it going to stand out against the competition? How will it keep it standing out? How innovative is it? Is it very disruptive? Is it very exciting? Is it very niche? And what is the opportunity there that you spotted by that particular business? And how far will your money help that to really stand out and build and grow a great business? We do want businesses to have what I call a realistic funding journey, which means that they need an amount of money to build and grow, but we certainly don't want them to be crazy. But you need to be clear that they've got a strategy for growth and that you understand overall how much money you will need to be putting into a business over time. That's very important indeed to know about. And it's important to think where that money will come from when it's not angel money, and how far that business has got a very strong growth ambition and a strong growth and funding strategy. And then finally, we talk about exits. To be perfectly honest, in the early stage, we say a lot about exits, but actually the scenery changes rapidly. But you do want to know that a business has a sense of how they will return your money and how you will build and grow that business, and what is their strategy for ultimately making sure that they exit. If they don't want to exit, it's quite a big signal to you, because that could mean it's a lifestyle business. They love the business more than they want your money, and that perhaps they don't have that drive and ambition to want to get to the end and be a successful entrepreneur. So what are your next steps? You need to get connected. As I said, don't do it on your own. Absolutely do not do this on. Join a group, join a syndicate, get to know other investors. As I've said, draw on other people's experience. You actually need to go to a lot of networking events as well, and loads and groups, organized networking. You need to get to know who your fellow investors are. You need to know whether you will be comfortable in co-investing with them. Do you trust them? Do you trust their knowledge, their experience, their expertise? Because you need to build people around you. Say, I always invest with Fred because I always recognize that he's got a great eye for a great company, or, it's kind of good to know who your allies are and people you trust. And as you build and grow your strength and your opportunities and your experience, then you may well become that lead yourself. But at first, it's very important. And I will say, go to a lot of pitching events, because that's the way to, see a lot of businesses, see them pitch, get a feel for what they do, listen to what other investors ask, and what are the questions that are being asked, what is it you need to know, and make sure that you've really seen a whole range of businesses, particularly before you make an investment. But by the way, don't sit on your thumbs either for months on end. I mean, do something about it. And one good way of doing something about it is take advantage of education, of workshops, knowledge, webinars, and everything you can to kind of make sure you really inform yourself so that you're making clear and strong judgments during this time. But being aware that it's about connecting, it's about being involved and being very social. Don't sit in a quiet corner trying to work out a deal on your own, or trying to wonder what to invest in next. And obviously, you've heard from advisors too, taking advice is incredibly important. And remembering that angel investment in the end is a legal process. And I haven't gone into all the ins and outs because we can tell you more over time, but it is a legal process. You need good lawyers and good advisors around you to make sure all the right details are understood in the due diligence process. I mentioned our e-learning course because it's an online course, and it's worth knowing about if you want to kind of get into the real in-depth. It's actually 6 modules taking you right through from right from the beginnings, and telling you all about, in much more detail, about the tax breaks, the legal processes. But it has, most importantly, it has 22 angel investors who've contributed their insights and expertise and knowledge to that. So although we did a little time ago now, it's still very, very relevant. Not much has changed, interestingly, since that time. Probably worth knowing about that we're starting to do some specialist sector courses too. So look out next. I'll be sending you some details about our new creative industries tool called Investing Creative. For anyone who wants to invest in the creative industries, we have a very similar course to this, very in-depth learning from a lot of knowledge. So there are increasingly more and more knowledge out there that you can take advantage of. And of course, at Dorset Business Angels, they'll be able to help you again with a lot of advice and support and help as you go along the way. So I'm going to stop there because there could well be some questions. If there aren't, I can keep moving.